Good morning. Welcome to today's webinar. This is Josh. I'm going to be your presenter today. We're here to talk about accounting, investments, setting up investment accounts, and reflecting or showing a change in value. Churches will have investments of some kind at one time or another as a result of, for anything, just internal choices of investing, whether it's a bequest, endowment. There are many reasons why churches may have an investment account. Investments, of course, accounts can include CDs, certificates of deposit, money market accounts, brokerage accounts, stock accounts. They can be a variety of accounts that are set up. And if we go into, our chart of accounts here under manage accounts, we see we've got a money market account. Even a savings in some cases could be considered an investment account, especially if it's earning, fairly high interest rate. Notice we've got an existing CD. We've got a Lynn Schwab investment accounts. We're going to be setting up a new CD today in our chart of accounts, but essentially they're all assets, okay? They are at least going to be set up as asset accounts, okay? And they're often considered, long-term in many cases, ones where they're not going to be turned over, say, in a few days or a couple of weeks, but maybe several months, even to several years, okay? And then we have to show those changes in value in those investment accounts periodically with whatever period you decide, whether it's monthly, semi-monthly, annually, you decide, okay? All right, so we're going to go ahead and as the document points out on the handout, says establish an asset for the investment account. So we're going to add that here. So it's again going to be another CD. So right here, and I'm going to point, I'm getting ahead of myself here. Well, if I go up to say reports, financial balance sheet, right here, I'm going to run it through say today, May. But now we see we've got our national city CD account with $62,995.58. When we go down to our funds, we clearly see our education building fund balance with the same exact balance in it. That tells us that likely that CD balance is offset or represented on the bottom side of our balance sheet in that education building fund, okay? That's one of the things that, this document talks about establishing, certainly setting up an asset account, but then under part 2, it talks about establishing a fund for the investments. Well, that really, again, is really a pretty subjective call, I guess. That's what I want to comment about that is, while certainly you would want to set up the asset at the top side of the balance sheet to reflect that account that the church, new account that the church now owns, but there's different thoughts on whether you would need or want to set up a fund balance to offset that, okay? A lot of Church Windows users like to see a one-to-one ratio of assets to funds. They go, okay, my checking account exclusively represents the balance or activity in my general operating fund. My savings account exclusively represents the activity in one or a handful of funds. But there's some tie out between the funds and the assets at the top and bottom of the balance sheet, okay? But I think that to try to make a long story short about that is that while that is absolutely acceptable and a reasonable way to approach it, there is no requirement in Church Windows accounting to have a direct relationship of assets to funds. So if I choose to just simply set up a national or a new CD account for on the top side under my assets and transfer the balance from Huntington Bank checking into that new CD and not move it anywhere on the bottom side of my balance sheet, that is up my prerogative entirely. Church Windows does not require, accounting does not require that we have an offsetting fund. I think we're going to do that, okay, for complete clarity on our reports, okay? But in terms of what is required in the software, there is not a requirement of a direct ratio of assets to funds, okay? All right, so to kind of get through that quickly, or that long-winded story quickly, or explanation, let's go back in and let's set up our accounts. So we're going to go to Manage Accounts. I'm going to do this all from the Chart of Accounts page. So we're going to put in account number now 12110. So we're going to go to the tree view. We're going to right-click, Add New Asset. And we're going to call this Huntington Bank CD, and we're going to number it 120, 110, not 21, 110. There we go. And we're going to put it into our total current assets and investments subtotal, and we're going to click OK. Notice it now adds that account down here under our asset accounts. If I chose to leave it at that, that's all that it would require, okay? But we are going to do this. So we do know, so again, to kind of further that explanation of what I was talking about before is why it might be helpful to set up a corresponding CD or fund about it is, if your folks are looking at accounts on, say, your balance sheet, and notably funds to determine what money is available to use for, certain expenses or things that the church is needing or wanting to do, maybe we don't want that money to be sitting in the, say, general operating fund, and folks go, oh, well, look at this surplus we've got in our general operating fund. We can afford to do X, Y, and Z, okay? So by moving that out into a different fund, perhaps now that might make sure that we're looking at an actual accurate operating fund balance in terms of what we actually have as cash on hand. So we're going to add another fund down here. Again, we're going to go to Tree View. We're going to go to Funds. We're going to add a new fund, and we're going to label this one Huntington CD Fund. And then we tab down, and we're going to label this one 370-100. And there is only one total fund balance as we add it. Here's our Huntington Fund CD. Notice over here on the right under Tree View, there's no plus or minus next to it. What that means tells us is there is not yet an income or an expense account set up and added to this account. So we're going to do that as well. So we're going to choose Add Income Account. We're going to call this CD Income. If I could type and get my case there straight. So 60 or 70, let's do that differently. 70-100, let's try that. Total, we're going to call this Other Income. Okay. Again, now notice there's an income account link there. We're going to right click and choose Add Expense. We're going to call CD Expense. I'm just simplifying these folks' names for simplicity purposes and speed for our webinar today. So here we might put this under, we're going to pick designated expenses today. If I need to, I could move it later. Okay, and it's added the account. So now we notice to the right, Huntington CD Fund has at least one income and one expense, okay? We would typically use this if we wanted to show any, say, income, new income, or dividends, or any fees that were being paid out of it, okay? If those were not there, maybe we want to post something directly to the fund to be able to make that occur, okay? So, all right. So now now that we've got these accounts set up, we're now going to establish these or move these balances into this account. If this was new money, I would probably come in and, assuming it was a gift from a person at the church, a member or visitor, we would probably record that through donations, coming right into the income account and showing it as new income in 2024 for that. But in this particular case, our CD is being established from existing account balances. So we don't want to hit our treasurer's report for this. We're not actually bringing in new income, and we're not actually expensing anything. We're simply moving money from one asset account to another, a lateral sideways adjustment, essentially, okay? And how we're going to handle that is all through transfers. So we're going to go up here to Transactions, right across the top to Transfer, and we're going to say that that happened on April 30th. So here the from account is going to be, say, Huntington Checking. Okay, once I've chosen the from account under my from account, it automatically requires that I choose another asset account to transfer the money to, and there's my Huntington Bank CD. We're going to say, 30,000. I'm just using an arbitrary figure, folks. 30,000. Okay, and we can enter how it's being moved. If it's electronically, we're going to choose EFT. Enter any desired comments, click Done, Add to Batch. Okay, and then I do Show Running Balance up here. We now notice Huntington Bank CD shows a current balance of 0. The transaction effect is increasing it by 30,000. The adjusted balance, should we decide to post this, will then be 30,000, which is exactly what we want. And we now also notice that Huntington Bank checking was now been reduced by 30,000 and shows the adjusted balance after the transfer. Okay. But this does nothing to affect the fund. Okay. So we also then have to go up here and we have to do another transfer from our, say, general operating fund to our CD fund. So here's our Huntington CD fund balance, and we're going to post another transfer for the same exact amount of money. Okay. We are moving money on both sides of our balance sheet through two different transfer transactions. Similarly, again, I would enter any desired comments, clicking Done, Add to Batch, and again, Show Running Balance shows Huntington Bank Huntington General Operating Fund has been reduced by 30,000, and Huntington CD fund balance has been increased by 30,000. Okay, so that show running balance window is doing exactly, it's confirming for me that these transactions are doing exactly what I want them to do. Okay, if you're not using the show running balance window, folks, I strongly advise that you do. This simply ensures that you're posting the desired transaction to the accounts and it's having the proper desired effect before you post it. If it was not doing what I wanted it to do, okay, I could move the desired transaction back up to the top, fix it, add it back, and again, verify under show running balance that it's doing what I want. Okay, so so now we're going to go ahead and post this. We're not going to print it for time's sake. Now when we go back into our, say, financial reports balance sheet, and we now go to print, it's now showing 30,000 in our Huntington Bank CD, checking is lower, and now we go down to here and we are showing 30,000 in our Huntington CD fund, and our general operating fund has been adjusted accordingly. Okay, so that's how we would establish those accounts. All right, so I think we're doing all right on time here. All right. So in this case now we've established the accounts. So now then maybe in another month or 3 months or 6 months from now, we've received a new statement from Huntington Bank with regards to the state of the CD. Okay. So this is where then we have to post these adjustments or changes in value. Okay. So we're going to do that. So here it shows under number 3 on the document, if, say, we've received income into it in the form of interest or dividends, we would go to enter income and we would put in the date that it occurred, and I'm entering a future date, folks. You know, I'm imagining things down the road here. And so right here we would enter comments, you know, Huntington CD, you know, not Huntington Bank checking, sorry, we're going to choose the Huntington Bank CD, and here we're going to choose our CD income account. And we would put in whatever the gains in that particular account was for the period, okay? And again, we would click Done, Add to Batch. So by crediting the income account, it's going to appear on my treasurer's report as well as going into the Huntington Bank or Huntington CD fund and going into the asset account equally, okay? If I had losses or maybe fees or expenses that need to be paid out of it, I would go the other way. I would either do enter bills, pay bills, and post it out of there that way, or I would do a simple journal entry debiting the CD expense account and crediting the CD asset account to reduce it. It's your choice, folks. This software has enormous flexibility, and you can typically do things a couple different ways in order to get the outcome that you're wanting. Okay? So we would go ahead and post that. So we'll post, and we're not going to print, and then we're going to go back in and look at our balance sheet, but this time we're going to run it for, say, July. We've jumped into the future here, and now when we go here, it shows here Huntington Bank CD shows 30,567.89, and down here under our fund balances, the Huntington CD fund has been increased by the same amount equally. That's the thing about the one-to-one ratio of assets to funds is, assuming we've done everything correctly, we should be able to look at the balance sheet anytime, and the balance of the fund and the CD should be exactly the same. If they're not, then that would be an indication that we've done something wrong. Okay, finally, with about 4 minutes left, 5 minutes left, very last section, show an increase and decrease in market value of an investment account, okay? And so here, this is where we now go up to transactions in the upper left, other, and either adjust asset transaction or journal entry transaction, okay? So if, well, I'm not, maybe many of you are familiar with this function, maybe not, I don't know. But journal entry transaction requires that you understand the debits and credits and their desired effect on the accounts, okay? If you struggle with the debits and credits as they pertain to assets and expenses, then perhaps the adjust asset transaction is the way to go, okay? It takes out debits and credits entirely, and it shows, choose the asset account, so right here, if I go, okay, I want to show a change in my Huntington Bank CD account, notice it says increase, decrease. Debits and credits is not in play. When you choose increase, it knows that it's posting a debit to the asset that I select. If I choose decrease, it's showing as a credit to the asset account. So I would enter the amount here, okay? So let's say we want to show a change in market value. So we would show, and then we'd enter the date on that, whatever date I was wanting to do it. To reflect the change, we're just going to, for the purposes of our webinar, we're going to choose June 30th. And then down here, after entering comments, of course, I would then come down here and I would choose the CD fund right here, Huntington CD fund balance, and I would enter the same exact amount. This way, I'm posting it directly to the fund, and I am not posting anything to income and expense. I can choose income and expense. I can choose any account here. Folks, this is essentially a journal entry, okay? Again, it just takes debits and credits out of the mix. And I guess one of the advantages of using journal entry versus adjust asset is I don't have a show running balance button here. Okay, I can't see that this is doing what I want. If we go into journal entry, it does have the show running balance window. But in this case, I would be showing a change in market value. Or if it was losing money, I would choose decrease. Okay, either way. But if I were to decide to post this, it would now add in $1,001.99 into that balance of both the fund and the CD. And what this does by doing this is it bypasses my treasurer's report and income, and it only, or income or expense for that matter, and it only reports on, shows as a change on my balance sheet only. It does not appear anywhere else. Okay. So I'm deliberately bypassing the treasurer's report because a change in value, my church does not consider an amount that we want to reflect on our treasurer's report, and we only want to show its new value on our balance sheet. So if I post that, say no to print, and go up to reports and export, I've got about 60 seconds here, folks. I'm so sorry. Let's run this through June and go to print. We now show, here it is, 31,001.99 under the asset and under the corresponding fund. Okay, so again, I just want to confirm that when we're going up to transactions, other, and adjust asset, it is a journal entry, and notice it says NSF checks, deposit corrections, or stock valuations. So that would be, I kind of lump that into anything that I would want to change necessarily that I just want to affect on my balance sheet. Journal entry transaction, again, folks, you have control over doing anything, but you do have the running balance window that you don't have at that adjust asset transaction screen. But use the show running balance, folks. It's really helpful. It's everywhere. But it will help you get these transactions posted and affecting your accounts and your investment accounts correctly. All right, so that's where we're going to leave it today. We went about a minute long. I apologize for that.